Kearabilwe Nonyana from Prime XBT now joins us to look at the markets. Kearabilwe, so good to chat to you once again. Now, the markets have been doing relatively well this week. The Aussie has been doing well. The Rand has been up. What are you looking at the moment, and what sense do you have of the markets?
I think there's a bit of divergence between the performance of global markets and our market, and I think it's at a level of there's been a bit of a rotation since the mid-November into looking at broad-based valuations instead of following momentum, because the stocks that have pretty much did well in 2025 were the platinum gold miners and a bit of the industrials in Naspers and Richmond as well. So I think people are looking for value right across the board. What we're starting to see is that people are taking a play of both what has done well in 2025 and what is showing value at the end of 2025. And I think that's why you're seeing our market really doing well and bucking the trend in terms of the volatility that we're seeing across Europe and the US at the moment.
It's been interesting for the Rand as well, because we've seen it strengthen and strengthen. What's driving this at the moment?
I think it's people just really not loving the US dollar in 2025. And I think it's the rising debt levels which are coming out of there, the geopolitical tensions which are being seen in Venezuela, and the lack of brokering a peace deal between Ukraine and Russia. But what we have also done well in South Africa is that we've gotten our fiscal house in order, as well as the monetary policy anchoring of inflation around 3% has been something that has given capital markets a lot of foundation. But I think really, if we had to be honest, when we're looking at why the Rand is so strong, it's been a lot of US dollar weakness. Even though you're seeing relative strength against other currencies, when you're looking at JPY strength, Euro strength, and as well as the Rand strength against the pound. So it's truly strong against all currencies, but I think it really has to do with capital flows in the United States dollar at the moment.
It's interesting because I think in the United States, the tide may be turning a little bit. 2026 is going to be interesting. We've got the US Fed, we've got Jerome Powell, there's moves by Donald Trump to remove him. I think we're going to have a very volatile 2026 from a US point of view.
Yeah, I think the volatility will be the name of the game. But when we really look at the economic certainty in the US, I don't think much has changed. I think when you look at the projections by the Fed in the last Fed report, they're anticipating that economic growth will be better in 2026. Inflation is going to stay within the target band, and we saw with yesterday's print where it came out at just lower than 3% at 2.7%. And I think what really is concerning is the softness in the labor market, because the Jerome Powell still says that he believes since April there's been a little bit of double counting in terms of the employment numbers, and they may look worse than they currently are sitting. And listening to other governors since that meeting, I was listening to Chris as well as Bostic, but there seems to be divergence and as well as fragmentation in the views. I've always been of the opinion that there's always superstars within a board of governors, and it usually takes the views on monetary policy and everybody just kind of follows. And that's my criticism of the SARB. But I think that the divergence and fragmentation and I may say are factions which are coming out of the Fed are really going to put a great 2026 in terms of how monetary policy is going to be viewed in the US.
Yeah, all right, let's talk about the SARB, because I would think in January they've got one decision to take, and everyone's saying 25 basis points. Is that a given?
I think it is a given. I think they've been far ahead of the curve. And recently, with the anchoring of inflation around 3%, they said they have tapered down expectations, especially wage price inflation, which means that they believe that the economy is starting to believe that that's where inflation is going to be, and that's where they're going to put prices. And currently, if we're looking at inflation, we have no imported inflation with the oil price going below 60, and as well as a strengthening rand. So I do anticipate that there's probably 100% chance of a rate cut of 25 basis points, and it gives them room in further meetings as well in 2026. So it's great for the consumer, more savings, as well as better for the economy in terms of consumer demand.
Yeah, right. Looking at today, Telkom, Naspers, Process, all up. What have you been looking at today? Those three or others as well?
No, I think I think when you get to this part of the year, there's a bit of window dressing that happens in institutions, and people just really marking to market and rebalancing portfolios before they go and leave and leaving juniors on the trading desk. I know I'm not much of a junior, but I do really like looking at what happens and the sort of order flows which comes from institutions at this time of year, because there's a bit of window dressing, people chasing alpha, people locking in profits, and people position themselves in rotations. Telkom has really done well in the year, and I think it has been a surprise in terms of telecommunications in general, because right across the board they've really done well. But I think with Naspers and the industrials, it's just people just repositioning themselves, and really you may also find that people just
Yeah,
repositioning
yeah,
their benchmarks as well.
yeah. Right. Okay. Your stock pick, in a nutshell, quickly. What are you looking at?
I'm looking at Bidcorp, and it's a valuation play. I think it's been 8% down since last year. Valuation sitting on a PE about 17, but I think when you're looking at the standard deviation between the enterprise value and EBITDA, you're seeing it's sitting at one standard deviation from the mean valuation, which means it's the cheapest that it's ever been since the unbundling from Bidvest. So my stock pick, Bidcorp.
Love it, love it, love it, love it. Kearabilwe, we'll see you in the new year. Have a lovely, lovely Christmas and New Year, and we'll see you in 2026.
Have a great holiday season, Ray.
Thanks. See you soon. That
Cheers.
was Kearabilwe Nonyana from Prime XBT.